Hey, this will be a video chart on AFPW. Before I get started, I would like to note that please check out my website, bullwarriorstocks.com. If you go there and subscribe to the free newsletter, you'll get a free ebook. And just a good website, covers everything from big boards down to penny stocks. It's all free. We've been making some good money together on our alerts, so I'd encourage you to go to the website, sign up, and check it out. So with AFPW, great looking chart. Obviously, as you can see, the past 3 days, volume has just steadily increased, and today was kind of like when the dynamite finally exploded, and some very nice things have been happening. But today, a big event happened that hasn't occurred in a long time, and I'll get to that in just a second. But real quick, I'm a big fan of taking real life examples and turning them into just little educational examples. So this right here is a great example of a volume alert play. You can see that for the longest time, barely any volume, then all of a sudden, boom, you see this big volume bar come in. Price was green, but not green, by any huge amount or anything like that. So this is, I wonder if something's going on. Put it on the radar. The next day, you can see volume got better, price reacted accordingly. So after seeing this day, this would be one where you'd probably want to have gotten some shares. And then the follow through today was just, massive, like I already said. So just a great example of a chart that got big volume and then just kept on increasing with the increasing price action. So there's your Friday little lesson for you. As far as the chart, I'd mentioned that something happened today that hadn't occurred in a long time, and that event is the price was able to not only break above but close above this orange line here, which is the 200-day simple moving average. If you're familiar with technical analysis, you know that this is one of the key moving averages to always watch, and you want to see the price get above. So on the support front, we have two key levels. The first being what I'm going to call is the ideal level. Ideally, we'd want to see the 200-day hold. But if it does not, then the must hold is going to be down here, this purple line, which is the 50-day simple moving average. And I know nobody would want to see it fall that far, but let's say it did come all the way down here, found support right here around the 50-day, and then bounce back up. The reason that would still be technically okay from a broader perspective is this set of lows would be higher than this set, and when we would connect them, we'd still be able to draw this uptrend line like that. So ideally, we don't want to see it come down here. Maybe worst case, bounce off the 0.005, which is the 200-day moving average. But from the broad overall view, as long as the 50-day simple moving average holds going forward, then the chart is going to remain bullish from the longer term overall perspective. Obviously, if you're a day trader, you're not really too concerned about this, but for the overall players, the 50-day is going to be the key level now moving forward. In terms of resistance levels, essentially the chart's in what I would consider blue sky breakout territory, but there is a level of resistance that's both psychological and does make sense from the charting standpoint right here at a penny. And the reason I picked that is you can see that the price has broken above it multiple times, but it's never closed above it. You can see here broke above it, here broke above it, here gapped, but by the time the close came around, closed right at it, and then the next day you can see here couldn't get above it, and then the next day over here couldn't get above it. So 0.01, while it's always a psychological level, it is really a technical level too. And like I said, over here it shows that the price has broken above it multiple times, but as far as actually getting closes above it, it's been a long time since that has happened. So I'm going to make this line extra thick to represent it being the key level of resistance. So keep your eye on 0.01. Shorter term resistance levels, you could have one right around there at basically the 0.008 level. So that would be considered a resistance. But I'm going to leave that line skinny because with the right amount of volume like it's been getting, 0.008 will probably get obliterated just like it did today intraday. So this is the chart. Hopefully this helps. Once again, check out the website. It is all free. So if you have any more questions, let me know. But once more, this was AFPW. Thanks for listening and enjoy your weekends.